U.S. Treasuries took down.
Listen up, Rebels. Rebel Leader here, and today we're going to do a Rebel on the Run, and we're going to talk about big tech's earnings. Namely, yesterday, it was a huge earnings call for Apple, ticker symbol APPL. Now, you might have heard that they had record revenues for June quarters in their entire history, and it was great. They blew past, 30%, they beat estimates earnings per share by 30%, and they beat revenue by 10% off of what Wall Street thought they were going to do. This is huge numbers, and this is coming off, again, a very conservative estimates by Wall Street because of the whole pandemic that's going on, right? So why did the stock price not move? Now, this is the question and that everybody's asking, and it's because that the market technically was already forward looking that even if Apple blew away every expectation that was put on them, they still failed to provide any guidance for next quarter. They said they expect double-digit growth still, and while that's good, it's not good enough. It wasn't enough to, placate and even make happy all the rest of Wall Street. And the reason is because, they're talking about chip shortages. They're talking about, if they can't have the hardware, or the AMD chips to put in their new Macs or the new iPhones, the sales will suffer because of it. And, and then we're seeing, again, the rise of this Delta variants of COVID. So we're seeing a mashup of different things happening that's pushing the stock price, not even down, it's holding it still. It's holding the stock price from really running, right? Because it was around $145, $148 this past week. And, with the blowout earnings like they just had, this stock should be running up 5% or so, just based on the pure numbers that they're putting out there. And I think there's still a good chance that we're going to see a correction that, maybe in the next month, that we're going to see people really believe and really push Apple stock prices higher. For now, I think it's going to stay at this level because, again, they just had such a great earnings call. I think, iPhone sales year over year are up 50%. And that's for a company you think, oh, somebody already has an iPhone, there's not much that growth to make it. But, for them to have 50% year over year growth, it's ridiculous. It's their greatest quarter ever. And I think that's something to be said about the business model about Apple, that they're just going to keep getting bigger and better. And that's what you want. You want to put your money in a company that's one of the most powerful in the world, that is going to keep getting bigger and better every single year. That's the entire point of the game here. And so not only do I use all Apple products, and I just bought myself the new Mac last month, I going into this earnings call, I heavily invested in Apple, and I just bought stocks, no call option, no nothing like that, because in my mind, this is a great long-term play, but it was also a great short-term play. And the downside risk, I put it at 1%. And, yesterday after hours, it fell about 2%. It recovered the very next morning, this morning, So again, it's only down about 1% since I bought it in at. And, it was the safest bet ever because Apple is the biggest company, literally one of the most powerful companies in the world. But they also had the upside to run up 5%, 10%. Wall Street estimate price targets have the stock at $180 by the end of the year. So that's another 25% gain that it can run up between the next 6 months. And that's a pretty safe bet that Apple will deliver. It will deliver again on the earnings report third quarter. And, after it fixes where we see where the COVID's at, where we see where the chip shortages are at, it's all about providing forward-looking guidance as well as the numbers. So right now, the stock did not move, and, that's both a good thing and a bad thing, it's a safe bet. You can't lose your money in a company like Apple, and that's kind of where you can benefit from investing in a company like Apple, because you don't lose money, but you can make money. And even if the stock goes down, won't really go down, it'll stay still. At least you're not losing money, but you had all that potential to make money, right? So in short, it was a crazy earnings season all around. Even Tesla had great beats. Big tech beat all the markets. Amazon's, I believe, is tomorrow. And no matter what happens in these companies' earnings report, we're looking now for the future, and that's important to note where we're going in the fall. Rebel Leader, over and out.